Hey, what's up, guys? Welcome to the first value drop. In this series, I'll be walking you through some of the most interesting insights that I find and things I find on Twitter, reading, as well as business insights. And I'll try to keep it super short, sweet, and to the point. Awesome. So let's dive in. First of all, this is an awesome chart that shows the importance of why you should buy and hold. Because actually, you make most of your money holding stocks and investments more so than you lose in a drawdown. So here you can see historically the bull markets and bear markets throughout time, and you can see the huge upside you get from holding stocks for the long run, which obviously is why so many people hold stocks. All right, this is more about the importance of YouTube and social media. So here, this graphic was really interesting. 1 in 5 teens are almost constantly in YouTube. So that's the column to the left there, that's YouTube. And the bottom there is almost constantly. Above that, light pink, several times a day. Above that, about once a day, several times a week. Less often is the blue, and the dark blue is do not use. So you can see YouTube is actually the dominant platform for the next generations. TikTok as well, thankfully, a lot of them don't use it. Snapchat, still quite popular. Facebook, a huge amount of the younger generation do not use. And, Facebook has really been dying off relatively in terms of heavy usage. All right, now this insight I think is also very important. Also try to dive into why I think things are important. I mean, my point on that last slide is kind of the importance of video content and getting out there and sending your message and building a following. If you want to be a business today and you want to sell in the world today, you need to master video. You need to have an online presence. On that topic, if you want to market today, this is your marketplace, the top 25 websites in the world. So you can see still Google dominates that. YouTube is the second most popular website in the world, second most popular search engine really as well. So, many things, if I want to learn about, my go-tos are really Google, YouTube, ChatGPT, as you can see down at the bottom on the rise. And so also you see, Facebook is still very popular. Twitter, Instagram, other great places to market yourself as well. Even LinkedIn's on an appearance up there. So, depending on your business and what you do, you should be finding ways to get present on these platforms. All right, this was cool. I've been super interested in Neuralink for a long time, and I think in our lifetime we're going to have more augmented intelligence, where we're actually helping improve our memory, improve our cognitive function, and move away from the slow biological computers that we have to something more performant. But anyways, the first use cases of Neuralink are going to be more along the lines of helping people who are paralyzed or blind. So if we take a look here, these are some of the basic use cases they're going to be looking to do, finding those areas in the brain that are not firing anymore and triggering them, trying to get them to retrain and relearn so that you can actually have someone who's paralyzed and help them to learn to have their motor skills again, which would be awesome. And then, maybe in 10, 20 years, we can start looking at augmenting memory and some really cool stuff. All right, great. Yeah, this was really interesting. Visual Capitalist has a bunch of great tweets, but these are the most profitable companies by sector. You might want to own these maybe. Think about putting these in your portfolio. Obviously, Apple is a giant, ExxonMobil, I mean, you cannot deny oil and gas. I mean, there's so much focus on renewables, and that's really important. We need to keep doing that. But it's going to be really hard to get away from the plastics that we use. If you look at medical devices, everything around you is built with plastics. And so we're really going to need to find sustainable ways to continue to use these until we can find another alternative, whether that's, even possible with the materials that we have. And so, I don't personally own it. I'm more on the tech stocks. So, Apple, Tesla, Amazon, Microsoft, those types of companies. But this was really interesting. Verizon, very popular, very profitable rather. Visa as well, just a super consistent, profitable company, incredible margins at Visa. So this was a great find, I would say. All right, cool. So that's what we've got there. And then I wanted to quickly show you a few other things that were interesting to me. So Paul Graham, one of the founders of Y Combinator, a startup accelerator, I would say, out of Silicon Valley. They make minority, I believe, 10% investments in startups that they believe have high potential, and then help coach them, build them, and try to get product market fit and have some of those companies go on to succeed. So, there's a lot of really famous companies that have come out of Y Combinator, including Stripe and many others. And so Paul Graham has his blog here, and he's written a bunch of great stuff. If you're a startup nerd, you're probably very familiar with him, but he just came out with a new article on how to do great work. And it took me a few days to have enough time to read through this whole article because it is, pretty dense, just in terms of length. But there were a ton of great insights in this article, and it was really a joy to read. So I would highly recommend you check this out. It's a good article to read at any time in your life, and it's always good to read stuff like this by people who've really done something significant with their life. And to add to that, this is the best article I've ever found that combines a bunch of similar articles like this. So these are the 13 immutable reads on choosing what to work on. Bottom line, it's very similar stuff. I mean, Naval, Sam Altman, Paul Graham makes an appearance in here as well. All about, finding what you want to do, your sweet spot, doing what you love. Richard Hamming as well, a researcher from Bell Labs back in their heyday. And of course, some commencement speeches. Peter Thiel, I think we've got the Steve Jobs commencement address here at the bottom as well. And Ben Horowitz from Andreessen and Horowitz talking about more practically, you need to follow where you provide value than just your passions in the market. Cool. So yeah, highly recommend you check that out. So if we get back to the stock market a little bit, because I talked about a few companies there. We've had a great run now in the last year, going up on the US stock market, S&P 500, almost 19% since the beginning of the year, and really has made a strong rebound with a lot of the tech stocks leading the way. And in the US particularly, we just had some really good inflation numbers coming in. So it looks like we are going to have a soft landing, and we're going to potentially get back into some better growth times. We actually noticed when the market tightened that lots of the companies that we work with at SlashDev weren't able to get funding if they didn't have strong product market fit. So when interest rates go from basically free money, moving up and up, 5, 6, 7% as we move up, then we're talking about much tighter capital markets where it's harder to get access. I mean, when investors have a drawdown in their wealth, 20 or so percent, and many of them are in riskier assets with higher drawdowns, they don't have as much money to invest in startups or to try things, and people are getting laid off, and founders don't have as much money to put towards their companies. So it has been a rough spot, and we've also seen that in the venture capital market. I'll talk about that in another video, but essentially we're at relative lows in terms of the total amount of venture capital money that has been raised. And due to that, it's a lot of later stage companies that are getting funding. So the venture capitalists are focusing on the parts of their portfolio that are profitable and that they need to continue to invest in. They're not focusing on the new bets as much. And so hopefully, towards the end of this year and into 2024, we can get back to a little bit better environment for startups and software companies and really see growth pick up again. but depending on how long rates stay high, I think there's still a lot of damage in the housing sector that could happen. Yeah, so a few more things. This is TradingView. This is just interesting to show because this is what I use to benchmark anything I want to invest in. So let's take a 5-year view, and of course we have Tesla just crushing everything, but my general hypothesis is to not waste too much time. I used to be really interested in trading in options, and you spend a lot of time and don't get great returns. As we saw, you make more money holding a stock than you do selling it, unless you're the best of the best, and often you have very close to insider information. If you're a top hedge fund, you know what others don't know. But here, I look for the companies that are no-brainers and that are going to succeed. So, Apple has historically been an excellent company to hold. If we just take Tesla off this to get a bit more reasonable perspective on how things have been going, Apple has been an excellent returning stock over the long run. These are some of the other things that I look at and hold in my portfolio. Yeah, this Vanguard is just an index, actually. But you can see here, Constellation Software, that is essentially a vertical market software acquirer. And so they've also been an incredible stock over the long run. Looks like I got a double Apple here. Amazon as well. Microsoft is a stock that should be on here as well. But really, historical performance does not determine the future. So you need to still believe in a company. But I would much rather own something that is crushing it, that I believe is going to continue to dominate the market, than buy something that might do well. Whether it's at a cheaper price and the value's there, I'd rather pay a bit more and own Apple than pay less and own something that's at a discount but doesn't have as good of a business, or is expensive and might succeed because it's, maybe its product will hit, or maybe I want to invest in things that are no-brainers. So that's my simple hypothesis there. I do own Tesla, and there's a huge risk with Tesla. So another interesting thing to know is Tesla and Ford are the only American car makers to not have gone bankrupt. So I didn't invest in Tesla until the recent drawback, because historically auto companies are very hard companies to run. I mean, you have a lot of capital expense, you have factories, and maybe you have a hit model, but maybe 5 years later you do not have a hit model car, and you have all of these factories and all of these assets that you need to pay for are actually liabilities at that point. When you're talking about, paying for these factories and needing to scale back, and the margins are also not great. And so those are some of the things going against Tesla. Now, the things going for Tesla is you have arguably, who I would say is the greatest entrepreneur of all time, running the company, and you have a lot of other bets going on. So Tesla is not just an automotive company. They're also an artificial intelligence company. They're a huge battery manufacturer. And so there's a lot of upside there. So essentially, try to get into Tesla at the downturns is what I would say. And yeah, so essentially that's everything I got for you guys. That's, I'll try to do these every once in a while with a quick value drop, coolest things that I see on Twitter, in the markets, and building the company. So thanks for the time. Cheers.